Welcome traders. In this video we're going to go over Iceberg orders and how ZoneTraderPro is able to detect an Iceberg order and why it's important to you. Today we saw two extremely large Iceberg orders, today being Tuesday, July 13th. And the first one executed here at about 13:36, 13:35 hours Eastern time. And then the next one started executing here at 15:10 hours and completed about 20 minutes later. So let's take a look at the first Iceberg order. In it, we saw that we had a strong trend reversal, which occurs when price trades from blue resistance up here down to the blue support down here, and we get a retracement back to minor support. This is a strong trend reversal trade, and the VIX template picks this up perfectly, and we end up going to get about 9.5 points from that trade. Now, what's interesting is look at the delta down here. The delta is the KP2 number, the delta from the high to the low. In this case, it was 7,400 contracts, and that was spread out over just 38 ticks or 9.5 points. As we go from the high to the low here in the strong trend reversal, that was spread out over 16.5 points, and it was roughly about the same amount of contracts, 7,000. So how do you identify on ZoneTraderPro what is an Iceberg order or what is going to be the Iceberg order? The most important indicator to me is the KP2 ratio indicator found down here. So as I've talked about in prior videos, what happens is as price is going down right here, we see that the ratio is going down. So as it was at this bar right here, the ratio was about 73 contracts per tick. And as we got down and started with the Iceberg order, that number peaked at 260 contracts per tick as it was executing. So what is happening there is the Iceberg order is a hidden order that is being executed because somebody doesn't want to put a lot of size on the Superdome. And in an Iceberg order, you have to pay an extra amount to the exchange in order to do that. The other thing that's important is we don't know why this Iceberg or the following Iceberg is being executed. We don't know if it's being executed because somebody is entering a position or somebody is exiting a position or somebody is putting on a hedge. Here's a look at my larger time frame chart, which I have my delta strength indicator on, and the delta strength indicator is picking up individual large trades. Now on the open at 9:45, we saw a huge amount of short market orders going off right here, over 3,000. We also had a 1,500 lot being executed at the news release back here. And then at the high of the day, we had another very large lot being executed at the high of the day. So could this have been covering at the lows? Absolutely. It probably was not associated with options hedging because the spot gamma hero indicator was extremely negative on the day. Here is the book map, which is giving me the information about this first large Iceberg order, and basically the number got up to about 2,800 right here until the order was completed, and we traded a little bit lower after that. but at the time there was no big associated options trade. And as you can see at the time, the hero cumulative was a negative 274,000. So there wouldn't necessarily have been buyers at this point as far as needing to buy to hedge an option. Now we're taking a look at Bookmap and the second large iceberg order. So what happens is the first iceberg order begins to get hit right here, and that is for about 1,134 contracts, and that's why you see the larger bubble right here. And then when the selling let up, price traded up several points. Price came back down, again hit the same iceberg order. We know it's the same iceberg order because of this blue line. And that guy took another 591 contracts right here. He didn't get hit there. He got hit again here. We can see it. He got hit a fourth time, and then he got hit a fifth time right here. And basically what we're looking at is there was 3,000 contracts there, 580, 555, another 3,160 right here. And then when all of that was completed, what happened is the market traded up another 8 points. The market would eventually end up basically settling at the end of the day where all of this buying had taken place at, right here at about 43.60. The point of this is that when you see this, even if the Bloodhound indicator is deep red, as it was in each of these two instances, what you are looking for is you're looking for a warning about why you should not be in that trade. And basically, that warning is first right there, and second right there, where you end up getting these very large KP2 ratios. So we can see right here that this KP2 ratio, when it came down and it bounced 4 times, the KP2 ratio was at 204. And we had a 4-point zigzag occur and then came back, and that's when the remaining amount of that order got filled. And in the 5 points that the market fell, that iceberg order took the KP2 ratio to 242. And then what happened? We traded up 8.5 points. That is basically going to be your key, that if you're seeing the KP2 indicator diving down like it is right here and like it was right here, but the market itself is going sideways as it is right there, that is your key, that support is coming in at this point. And if we were short from back here or short from this strong trend reversal trade, that is an indication that we may need to exit our trade on the increasing support that we're seeing because of the KP2 ratio right here. So the point I'm really trying to make here is this. Even though we have a deep red Bloodhound and VIX going for us, if there is a buyer that is buying over 11,000 contracts right here on limit orders and over 7,000 contracts here on limit orders, well, he is supporting the market, and it's just not going to go down any further. And this is how ZoneTraderPro identifies accumulation in the market from these iceberg orders, either as support or resistance. On the sell side today, at approximately 10:36, 10:37 Eastern, we saw a much smaller iceberg order execute right here. It was only about 200 and 20 contracts. However, again, going into that trade, we again see the increasing ratio into that trade. And then what happened? The market sold off again another 6.75 points. So we do want to be aware, again, the same thing in reverse. If even though we are all green up here, if we see the KP2 ratio spiking and price trading sideways, what is happening is a significant amount of resistance is coming in, and it could either be because of an iceberg order or just because of other traders putting resistance up here. As I was editing the video, I also wanted to point out what was going on right here as we were making this high and about to go into this 16-point reversal. Basically, again, what you see down here is Bloodhound is giving us a 50-50 signal. And what is interesting is that we can deduce from the signal that the green is occurring when price is going higher, and as price goes sideways or slightly down, we get the red Bloodhound signal at 80 to 100%, and thus we get the Bloodhound racing stripe. So basically, as price started to increase right here, what that is telling us with the Bloodhound template was that the VIX had turned negative at this point. This is not to suggest that this is a trade entry at this counter trend area right here, but if we had entered this trend trade from here, again, what we were being given is a warning as price approached the counter trend zone. And additionally, if we look at the KP2 ratio, which we have just been doing, as price went higher, the ratio went higher, meaning that there was increased resistance. I want to thanks for watching this short video on how you find an iceberg with ZoneTraderPro. And if you should have any questions, be sure to give me a call. Stay safe. Take care.